Hello, everyone. Welcome to today's session on yet another review of a mutual fund scheme. Today, we'll be talking about SBI Infrastructure Fund. But before we dig deep into this particular fund, if you like our content, if you have followed our content for a while, and if you like our work, please do hit the subscribe button below this particular video, like this video, and share this video with your friends and well wishers. Right. So let's start, and we'll see what's in store for us. Right. So when it comes to the return comparison between of this particular fund, that is SBI Infrastructure Fund. So if you had invested 10,000 rupees in this particular fund since its inception, it would have transformed into 41,422. Just see the difference between these three parts, that is category, investment, and index. Very less difference between these three basically parameters. So if you had invested the same amount in other category, let's say mid cap or flexi cap, it would have generated a higher return. So if someone tells you that one should always invest in a sector specific or thematic fund in order to generate higher return, then he or she is simply trying to fool you, right? Now, when it comes to the managerial change, see, there have been three times when complete managerial change has occurred: 2014, 18, and 21. It's around December 2021, right? So when it comes to the investment details, see, the exit load is 0.5 if you redeem your investments within the first 30 days. The expense is quite high. It's quite high, 2.24%, right? This particular fund has to generate higher alpha if it has to justify the higher expense that it's charging. The turnover is 40%. That's I guess okay when it comes, if you compare this with the category average, right? The asset allocation is nearly 97.5% towards equity, and the rest is in the form of cash. In terms of factor profiling, if you see, the liquidity is very less because we can definitely see this fund has invested more into illiquid stocks. Quality is below average, right? The momentum is at par with the category average, and the yield is also less, but it is somewhere down the line at par with the category average. But the investment style is, or investment, the growth phase is much more higher than the category average. When it comes to risk analysis, just see the mean return. It's not, if you had invested the same in a benchmark, it would have generated more returns. See, 40% return, right? S&P BSE India Infrastructure TRI. So this is the benchmark, right? When it comes to Sharpe ratio, it's much higher than these two. That is equity, means the category as well as the benchmark. Beta is less and alpha is not much. Let's see. When it comes to the category average, it is nearly 7%, and this fund has generated an alpha of 7.76%. So there's not much difference between the alpha also. When it comes to exposure part, it is, this particular fund is overweight in industrials, basic materials, consumer cyclical, and energy. If you see the allocation towards the basic material, it is kind of overweight relative to the category. And when it comes to industrial, it is underweight if you compare with the category average, right? The top 10 holdings are Reliance, L&T, Torrent Power, Shree Cement, and so on. You can check this particular top 10 holdings or take a screenshot if you wish to. Now, this is the most important part. See, when it comes to upside, it has, see the category average, 115. This particular fund couldn't beat the category when in a bull market on an upward trajectory. And the downside, it has performed poorly than the category average. So you should be wary about these two ratios so that you can predict a particular fund's performance, right? By analyzing both the upside as well as downside capture ratios, right? Now, this particular fund has 35 stocks because it's a thematic fund. So the number of fund is less, right? These two are the fund managers, Bhavin Mitlani and Mohit Jain. They have joined late 2021, or you can say 2022. Our analysis says that this particular fund owns more growth stocks than its peers. That's perfectly okay. But the market cap is on par with its peers. The fees are high, definitely, as I've mentioned in the first two slides, that the fee is quite high. But whatever the rating we are given to this particular fund, it's based on the strong performance of the parent firm, that is SBI Mutual Fund. Now, our MoneyQuest rating is Rising Star. What is Rising Star? You can check out in our video about how we rate various mutual funds on basically three strata. Right? Thank you so much. This is